Coronavirus and real estate, part 2. What is the impact of coronavirus on real estate? In my previous video, Coronavirus and Real Estate, part 1, I mentioned that in real estate we often talk about seller's market, buyer's market, and now the new category, coronavirus market. And I touched on what is the initial effect we're observing right now. Today, we'll talk a bit more on how coronavirus rapidly affects the real estate market in both sectors, residential and commercial real estate. And we're starting right now. Before we begin, if you're new to this channel, welcome. I encourage you to subscribe and hit the little bell to be notified when I upload a new video. I'm Kate Smith, a local Hollywood real estate agent with Kate Smith Group, Frost & Bentley Realtors. Watch this video to the end to find out how to download our coronavirus help links and resources, as well as our free guidebooks filled with many more useful real estate tips. Looking back at history, previous pandemics have simply put the housing market on pause. The coronavirus, however, is making life and markets anything but normal. Now let's review what are the major positive aspects for the residential market at this moment and the steps taken in order to bring a much needed sense of normalcy, hope and optimism, knowing that this too shall pass. Low mortgage rates. 30-year mortgage rate this week is 3.75%, and it is expected to go down during the next 30 to 60 days, then up again. Fiscal stimulus of enormous magnitude. Stimulus checks, unemployment, and the coronavirus bill, the 2 trillion relief bill, is sending money directly to all of us Americans, which combined with the moratorium on foreclosures and mortgages and a weakened stock market will likely keep the property values stable and will provide substantial support to the mortgage markets. If your goal before coronavirus pandemic was to buy a home, sell your home and buy a bigger one, or downsize, or even relocate, you still should. You shouldn't put your real estate plans on hold, as the current circumstances are still positive for the residential market conditions. By virtue of technology, even the quarantine is not an issue, as the home can be delivered to you literally. From 3D virtual tours and video tours for years, as well as hosting online presentation of any home you choose, to a virtual closing, as even a remote notarization and virtual closings are a reality today, as Florida is one of the 23 states that recognized and adopted remote online notarization (RON) policies. Let's take a look at some other factors. Stock market crash and how it will affect the residential real estate. People who have lost a lot of their paper wealth will spend less on discretionary items such as second home or that luxury condo on the beach. And those who have them, will they rush to sell, which will then add to the existing surplus in certain areas and certain market segments such as downtown Miami condo market, Sunny Isles, etc. Retirees. Those who are retired or close to retirement, planning to buy a home in an active adult community, may have to shift their plans. The residential rental industry is now preparing to deal with tenants who have lost their income and are unable to make the current month's rent, and on the other hand, landlords are facing major challenges there, as there is currently a moratorium on evictions and they still have bills to pay, which leads to investors having some hard decisions to make between the volatile and often crashing stock market, and investing in properties facing non-paying tenants that can't be evicted. Hopefully, common sense will prevail. We have covered the current situation of the residential real estate market. But what about 9 to 12 months from now? What lies ahead for the residential real estate? Will the mortgage rates go up? Will lending become tighter? With the economy declining, would there be fewer buyers? Yet, with stock market crashing, would there be more possible influx of investors looking to buy at rock bottom prices, creating even more competition for affordable housing? Although no definitive and realistic answers could be given, one thing is certain: the way we buy homes will change forever, as virtual home buying process is likely to become the norm. Get ready. The commercial real estate market paints a very different picture, especially in Southeast Florida. The sectors of real estate that have been hit hardest so far are a number of major, very important industries for Florida: the hospitality industry, hotels, theme parks, conference centers, casinos, sports venues, restaurants and bars, and their respective support and commercial segment, as well as related retail. The travel industry, from flights, cruises, and all the transportation related to this, as well as support services, and of course the related retail services. Additionally, it remains to be seen how Florida's congregate senior housing industry will be impacted. Residential multifamily rental units. The long-term outlook for rentals is still bright. However, in light of demographic shifts that are still unfolding, there is an air of uncertainty. Class B properties will likely fare better than expensive A properties or Class C developments. New trends causing loss here, such as some renters will double up, and we may see some boomerang kids, like my nephew, moving back in with their parents in the near term. The single family built for rent might be a long-term beneficiary, as we may see a shift toward larger units that better accommodate working from home. Retail market and development. The impacts on the already declining retail are obvious in the near term. Restaurants and stores are unable to generate anything more than a fraction of their normal revenue. Magnifying this is a ripple effect, as retail landlords receive a flood of requests for rent relief coming from their tenants. And for landlords who have mortgage attached to their properties, the situation is simply becoming unmanageable, as this may not necessarily be covered by the CARES Act. The office sector, most office space is empty under social distancing, but one would imagine that after the health crisis subsides, offices will be occupied again. The big question is whether the work from home shift will stick, and also how long will the stay-at-home coronavirus pandemic will last, which of course will cause even greater decline in the office market. Industrial and warehouse space is the least impacted sector, experiencing short-term interruptions in the shipping supply chain, and it is expected to recover very quickly. The optimistic scenario is that, unlike in the Great Recession, once the virus is contained, the sharp drop is expected to go back up as a strong upswing, coming at some time in the second half of this year. The silver lining for real estate companies, as it happened at the bottom of the housing crash, real estate investors with deep pockets and long view will find opportunities to pick up assets at distressed prices, and with financing rates for those who need financing lower than most of us have ever seen in our careers. With that being said, our plan is to continue business as usual when it comes to real estate, as housing is and remains an essential service. We will continue to keep you informed, providing much needed assistance with all of your real estate needs in Southeast Florida right now. If you're considering buying or selling a home or a commercial property in 2020, contact us now to schedule a free consultation. We'll work with you to develop an action plan to not only meet your real estate goals this year, but to exceed your expectations. You will find all information and the links we discussed in the description below. Don't forget to download your free guide. Check out the links below. And thank you for joining me today. If you enjoyed this video, please like, comment and share the love. Don't forget to subscribe and stay tuned for more. Kate Smith, Hollywood, Florida.